All right. So for those people who are new here, I'm just gonna give you a very short introduction of who I am and how I got introduced in Forex and started trading. I've been trading Forex for, a long time. So almost about 10 to 15 years. Uh, and the first 5 years, it was basically, I think, like everybody else. I was on and off, trading as a hobby. And I was going to school and stuff back then, and I thought, I can make some money. But before I opened up my first account, I did not know anything about Forex, right? Investing in general. Um, it's a funny story. I had no clue about stock market, Forex market whatsoever. And one day I was talking with my brother, and he was telling me that, one of his friends bought 3,000 shares of Nike, right, at I guess $10, $15, and a couple of months later he sold it for $25 and he made so much money on it. And while we were talking, I was asking him about some ideas of how to make money, and he was explaining about the stock market to me. And back then I had no clue about the stock market. I didn't even know how it works. So what I thought was that that guy actually bought 3,000 pairs of Nike, right, at $10 each, since he was buying in volume, and he kept it for 2 months, right, in his like house or garage or something. And then when price went up to $20, he sold it, for a profit. And I thought, like, what a great idea. Maybe I can do the same thing, go buy a couple of pairs of shoes for $10 and then sell it for 20. Then I went online. I started doing some research of how to do stuff like this. And then I realized, when I went online, I realized that, you're not going to actually go buy pairs of shoes. You actually invest in that company. So that's how I got started and how I learned, how to make money in this business. So not actually buying, going to buy the actual product. So I started doing research, and the more I started doing research, I realized that, this is so easy. Like, it's so easy to make money. I'm gonna make $1 million, right, next year. So, but the more I thought about it, I invested some of my own money. I lost it all. Borrowed money from friends and family. I lost it all again. I remember my first account was $500, and back then $500 to me was, let's just say, $50,000 right now, right? That's how much it was worth to me, because at some point in my life I was so poor that I used to call McDonald's a restaurant, right? And you know, like at the end of the month, I only had like 25 cents in my account, and I couldn't do anything, go anywhere, like go out with my friends and stuff. So I started like investing. I lost my first account. I was so depressed, and I was thinking that this should be so easy. There's only two buttons. Like, when you think about it, guys, actually there's only two things that you can do. You can either buy or you can sell, right? So I was thinking to myself, this seems so easy, but why I lose money all the time, right? Like, I would make money one day and I was very happy. like over the moon, and I was, losing money 5 days in a row or 6 days in a row. Everything that I used to touch, used to turn into dust. So, but I didn't give up. I kept losing money for the first 2 years, and it was very painful. It was at the times that, I had my live account uh, in stock market, futures, options, and stuff. I had my live account, but on the other hand, I didn't dare to touch the account, right? So I would open up my demo account, test some stuff on the demo. It was working. Come up with a new idea. It works. I'm making money. Hey, let's just do it on a live account. Then as soon as I place my trade on a live account, bam, I lost money, right? So the problem I realized myself, the problem was my emotions was getting involved in my trading, like a lot, right? Then I started reading about psychology of trading. I heard some people talk about psychology of trading. So I thought maybe I read, a couple of books or I take a course on psychology of trading. The more I started reading about psychology of trading, I realized that every single story that the guy is talking about is true, right? Talks about when you trade, you know, you always get out too early. You are in profit, but you get too excited or you get too worried that you're gonna lose it, right? And as soon as you make a couple of ticks or a couple of pips, you take some profit out of the market, move to break even, let the rest run. Or back then, I wasn't using any break evens or multiple targets. I had 1-to-1 or 1-to-2 risk reward ratios, and most of my trades ended up, in the garbage. Back to the bank's pocket, basically, or your broker's pocket. So, it was very hard, making little money, like, a couple of dollars at a time. All of a sudden, bam, you lose $10. Just keep making money slowly, and then all of a sudden, everything is gone, right? So, even though that I knew how to manage risk, like I read about it many times, right? Like, I believe the same as you guys, you read about money management all the time. You read about psychology all the time. And yet, still you guys don't manage to make a decent amount of money for living, right? Um, I'm sure some of you guys actually make good money, right? So you're looking to make more money on top of it. Nothing wrong with that. The same way as I am, I would like to make more money, right? I will talk about why it's getting hard for me to make more money than, let's say, someone like you could make more money than me. Uh, but anyways, let's just get back to, how I started this thing. So I started reading some books about psychology. Then the more I read about psychology and, months passed by, I realized one thing. I realized that I have to stop, right? Since I was losing money, I realized that I had to stop trading for at least 8 weeks, right? Because they say it takes about 8 to 10 weeks to remove a bad habit and replace it with a new one, right? So if you guys started trading I don't know, about a year ago or 2 years ago, and you already have some bad habits, right, in trading. Uh, you either don't have discipline, you don't follow your uh, trade plan 100%. Whatever the case may be, you don't have a proper money management in place, you don't have a proper strategy, you don't check the news, all these things, right? So I realized that I have to stop whatever I'm doing and start getting back to basics, right? Back to basics, like, I learned this the hard way. Took me about 3 years of trading to realize that I have to now stop trading for at least a month or two, right? Just work on my psychology first before I get back into the market. Like, what I do basically in my own trading is I always check my psychology, right? Before I click to buy or sell, I always make sure, I'll ask this question to myself, are you ready to trade, right? So, when I started reading about psychology, I learned so many things about, human psychology, or I started studying a little bit about metaphysics, right? That opened my eyes to be able to think outside the box, right? Uh, Unfortunately, some people these days, they're not able to think outside the box, and they only follow what they have learned from, other people. So it doesn't, I don't mean Forex or stocks, I mean in general, in life, right? People tend to stick to their own thoughts or whatever you've learned before. You keep doing the same thing over and over again. Um, I think most of you guys know, like, or have seen the movie Secret. It's called The Secret. One of good friends of mine named Rhonda Byron, they made that movie Secret. And she was telling me that, she was sitting one day, she was she didn't have that much money. She was thinking about, how to make money, and all of a sudden came up with this great idea to build a movie Secret. And he knew some instructors and people, life coaches, right? That they do life coaching and stuff. And so he started interviewing some people, and he wrote a book, and then he turned it into a movie, right? And she made the movie. I don't know if it was with Australian producer, or I don't remember right now, but she turned out to make over $300 million off that movie. So I was talking to her one day, and she was telling me that our life is created by everything that we think about during the day, right? So when I'm talking about thinking outside the box, I mean you have to consider other possibilities, right, of making money. Like, you have to consider it. Like, no matter how that idea sounds stupid to you, right? You have to give it a chance. You have to be able to think outside the box to be able to achieve great things in your life. Trust me, I've been there, I've done that, and I think that's the only thing um, that is going to make you successful. Like this story that I'm going to tell you, some of you guys may think, it would be, you know, a chance that I became a millionaire myself. But the reality is, like, once I was, I became friends with Rhonda Byron. I met like great people, like such as Bob Proctor, Tony Robbins, I think, most of you guys may know Tony Robbins or Anthony Robbins. So yeah, so it's a pretty great movie. There is so many still problems with that movie and the concept that they were talking about in that movie. I think next year they're coming up with the second version, and there is also something else called it's called What the Bleep Do We Know, right? That's another interesting movie as well. That Bob Proctor talks in that movie as well. Anyways, let's get back to the point. So I was talking with Rhonda Byron. She told me something interesting. She told me that whatever you have in your life or you're gonna achieve in your life, it comes from the way you think. So your thoughts will create your reality, right? So she told me to do something. She's like, no, what do you want to achieve in your life? I said, I want to make $1,000,000, right? So she told me this. She's like, why don't you write it on a piece of paper or write a check to yourself for $1,000,000, right? And then keep this check with you and, once or twice a day, look at it, right? And then put it back in your wallet. It never happened to me within the first couple of years to become a millionaire, but the thing is, like, just thinking about making money or, uh, I don't know, becoming successful in Forex, right, doesn't make that happen. But what it does, I think, personally, is when you start focusing on something, right? Like, has it ever happened to you that you're trying to solve a problem, right? Like back in high school or university that you used to go, you would have been faced with some type of a mathematical formula or physics formula that you had to solve, right, for your exams or doing your MBA or PhDs and stuff. So, and no matter how much you think to try to solve the problem, right, it won't happen. So you may be stuck for a couple of weeks on that problem to find a solution for it, right? But since you are thinking about how to solve that problem over and over and over and over again, what will happen is your subconscious mind will find that solution for you. So it's very interesting that once I became friends with certain people, right, and my thought process changed, right, and I started working on my psychology to figure out why I'm not making money in Forex. Why is it so hard to make money, right? There is only two ways that the market goes. It either goes up or down. So, knowing a very simple mathematical formula, right, which if you have a 50-50% chance of winning or losing, you should be able to make money in Forex using 2-to-1 risk reward ratio, right? Just flip a coin, comes head, buy, comes tail, sell, keep on doing this over and over again, right? And so this is, what may comes into my mind. It looks very easy, but why we're not making money? So you have to go back to your psychology and the way, I understood it when I started studying about metaphysics was that your human brain, it's been proven scientifically that every human brain receives about 400 trillion bits of information per second, right? Just listen to this. 400 trillion bits of information per second. Not your brain, I'm sorry, your subconscious mind, right? That they call it a supercomputer. So your subconscious mind receives 400 trillion bits of information per second, but your brain can only process 2000 bits of it. So imagine you have an access to an ocean full of information, but you can only access, as much of a glass of water from that ocean, right? So since your brain is not able to process all the information, and since it's been proven scientifically, what your brain does is try to analyze all these information, right? So what I'm trying to get at is you have to be able to start thinking outside the box, right? I'm not going to be able to teach you all the stuff that I learned over the years, but what I'm trying to get at, look at yourself, see what happened to you, why you're not making money, why you're not profitable, right? Try to see if you have a business plan, if you're disciplined. How about your psychology? Are you happy at the day that you want to trade, or are you sad, right? So again, I want to tell you this fact that again it's been proven scientifically, and a company called HeartMath Institute, right, based on, I think they're in California. It's called Heart and Math Institute, right? They have found something very, very interesting. They have found that whenever there is an explosion in the sun, so we get, like, let's say solar storm, or we're approaching solar maximum, right? If everybody remember, back in 2012, uh, everything in the market was, on a downtrend, right? Back in 2012, I believe it would be, or yeah, back in 2012, right? Most of the time, market was in a downtrend. The major markets. So they have realized, they have found this, that human heart has a very strong, like, how should I put this that you guys will get it. It's very sensitive, right, to the explosions in the sun, and it will have a negative effect on your heart and on your bottom line psychology, since right now it's been proven again that your heart is much more smarter than your brain, right? They say the first brain is your heart, then the second is your brain. So having said that, is they have built some computers and they put it around the world, and it will measure the human consciousness, right, around the globe. So they're trying to do this for many years. I think they have 10, 15 different computers. So they receive some data from these computers, like how people collectively are feeling, right? So they have realized that on a stock market crash back in 2007, almost 15 minutes before the crash happens, right? I think 15 minutes or about an hour before the crash happens, they had a huge spike on that computer graph, like all the collective data that they were sampling. So they realized that there was an explosion in the sun back in 2012 that I was talking about. Same thing, that the market was bearish. We were approaching solar maximum. And this solar maximum, what happens on human psychology is people, they tend to be a little bit depressed. Like, someday you may wake up in the morning and you're like, oh, I'm not in a good mood today, right? So if you can find, like, it's almost impossible to, figure out how everybody collectively are feeling, right? Then go short on the stock market. And I guarantee you that you're going to make money. So these data has proven that every time that there is an explosion in the sun, that day market tends to be short, or people, they're selling because of their psychology. So telling you this story, I was trying to get to a point that try to think outside the box. Don't just think about technical analysis or level 2 or fundamentals. Don't think these things are the only answer to your solution. So I don't care if you want to believe me or you don't want to, you want to believe me. This is my experience, and the more I get deeper into stuff like this, I realize that whatever you think about or you're searching for, right, with all your heart and your brain, you will achieve it, whether you like it or not. It's like a law of gravity, right? This is a law that exists, so I don't care if you tell me that the law of gravity doesn't exist. I don't care if you believe it or not, right? If you say you don't believe it, but if you're gonna walk off the roof, you're gonna fall down. So again, this law exists whether you believe it or not, right? So anyways, so the more I started learning about psychology and stuff, I looked at myself and people around me. I realized that, everybody talks about trading is 80% psychological and 20% is technical. Then I look at myself, I realized that I spend more than 80% of my time looking for a better system to trade, looking for a holy grail, looking for other ways like correlations, carry trades, COT data, like everything. Try to mix and match stuff like this. And I realized the more I search, right, I lose my discipline. I lose my focus. I want to trade, then all of a sudden I think about another strategy that I learned 2 days ago. I would go look at it, then come back, I miss a trade. So this keeps happening to you over and over again. One way I thought of doing it to keep my emotion out of the game was robots, right? Building EAs, algorithmic trading, anything you name it. I tried it to make it automated, but it does not work. At least for me, maybe it works for you, right? At least for me personally, I have not seen a system that works on a consistent basis. Yeah, you may show me an EA that made money for the past 6 months or a year, right? Show me one EA which is live until this day for the past 5 years. Just show me one. So basically I couldn't even rely on something like this. Spend too much time and money building EAs and robots and stuff like this, and then at the end of the day, you're nowhere, right? You make a little bit money, broker screws around with you, you lose it all. So that's where it got me, right? So I realized trading is 80% psychological, but I spent over 80% of my time looking for a system, rather than working on my psychology, try to work on myself, keep repeating something over and over again and keep doing it. Like if you do something 10,000 times, it becomes a habit, right? So I try to do, like, let's say, be disciplined. By being disciplined, I mean I treat this business as a business, not trading. I don't treat it as, I'm a trader, right? I treat it as I have a business. I have to be on top of my business, otherwise I lose money, right? So I don't care if I work at home. I don't care if, I work at the office. I don't care if I'm traveling, right? And I'm on my laptop and working. I always do certain stuff since I'm treating this as a business. So I made a plan for myself and I tried to follow that plan 100% no matter what, right? It was very hard in the beginning. I kept missing stuff, or one day I wasn't in the mood. I said, okay, forget about this. But I mean, when you want to treat it as a business, I mean, like you have to be like, you want to go to the office, right? You don't go to office in your PJs, like in your pajama and your t-shirt, right? You change your clothes, you put, if you wear a suit, you wear a suit, or if you wear, nice clean clothes, right? So you change as if you're going outside. You do whatever you need to do as if you're going to the office and you have 500 employees. So you treat it that way. You dress nicely, you sit behind your computer, you shut everything else off, right? I used to trade this way until I started this room. You know, like I'm dealing with liquidity provider right now, a couple of banks, so I have to have my phone, on my hand, right? Sometimes I shut it down and just, let my assistant just answer my calls and stuff. But, these are the things that you're gonna miss. I put it down on my trading plan. When you sit down on your desk, shut your phone off, right? Sometimes I do it, sometimes I don't. But I'm trying to do as best as possible to remove some stuff that changes my focus from trading out of my habit. So this is something, guys, that you have to work on. Uh, write down whatever makes you distracted. Try to eliminate it no matter what. Like you have to do it. If you don't do it, I promise you, you will not be successful. I don't care if I hand you the order flow and level 2 system that I have. If I hand it over to you today, I guarantee you 100% that you're gonna crash and burn, right? Unless you listen to what I did and try to replicate it. You guys know that I'm not charging anyone any money. Everything is for free, right? So what do you have to lose? So try once in your life, listen to something that I say. I'll teach you level 2 order flow because my goal and plan is something else that I'm going to talk about in a second. But before we get into stuff like this, you have to work on your psychology, trade plan. I posted my trading plan from the time that I even think about working. Like as soon as I think that, okay, in the next 10 minutes or half an hour I have to start working, right? I will prepare whatever I need to prepare to be able to sit down and don't do anything else. So that's number one that you have to do. So you have to have clear mind to trade, right? If you were in a fight with your boyfriend or girlfriend or your wife, trust me, don't trade. I've been there, I've done that. It caused more harm than just take your mind off of I don't know, an argument. So if you guys need more information about psychology of trading, you let me know. I can help you on that part too. Probably introduce you to some books that I read and some people that I know that you can watch their YouTube videos and stuff, and it will help a lot. So after this, psychology, so now you know 80% of the whole thing is psychology. It's you, right? You're your worst enemy. Trust me. Not the system, not the strategy, not even the broker, right? Of course, you know, some brokers may play a big role, but at the end of the day, you know, it was you that you lost that money. So you have to take 100% responsibility, right? Um, so this is about psychology. Second, like after I fixed everything about my psychology, tried to follow it, and I knew it's going to take very long time, but I could not just wait a couple of years until, you know, I get my psychology right, then start trading. I was introduced to a couple of brokerage firms. You know, I applied for a couple of brokerage firms. I thought like, okay, I'll go work for a broker. They teach me everything. I'll work for a couple of years. Then I come out, I'll do my own thing. I'll make more money, right? I kept on hearing stories that people on Wall Street and Bay Street, like in Canada, they making, you know, 7-digit income, 8 digits income. But you know, it's all a myth. So some top traders, don't get me wrong, they make over $10 million a year right now. Back then, like let's say 15 years ago, 10 to 15 years ago, I remember when I started, you would actually get $5 to $50 million to trade. Bank would actually give you that much money to trade. But as soon as electronic trading became popular, right? It changed the whole thing. Like back then, banks, they were making money on commissions, right? And they were making money for themselves. Right now, they're doing the same thing, right? But less trading, making more commission. So they're making more money at the end of the day just by doing nothing, basically, right? You know, think about it like a big casino that no matter how much money you have, the house always wins at the end of the day in the long run, right? Maybe you have an edge in the beginning, but long run, you know, they're gonna make money. So when I started, like, let's say working for a brokerage firm, you know, they didn't teach me that much. Like even in a hedge fund, they don't teach you that much. Like, you know, they teach you the basic stuff, right? That everybody knows. So I thought like I'm going to get something more out of it. But once I started working for a hedge fund, that was when I was introduced to level 2 and order flow. And funny story, again, I thought, wow, you know, they have a pretty great system. They know the supply, and they can see the supply and demand, right? Not like a stock market, which everything is transparent, but you know, they have pretty big orders and volumes being executed at their firm, right? Then I realized just only that feed is not enough. And you know, who's going to teach me their secret, right? Who's going to teach me how they're using the flow? So, you know, it took me a long time, maybe 6, 7 months. I think even more. Just, you know, I had to look at other people's screen, just have a chat with them, stand there for like 10-15 minutes, see what they do, try to, like, whenever they click buy or sell, try to figure out, I couldn't record their screen, but I had to just stare at their screen, wait for the moment that they're clicking to buy or sell with the order flow, right? So I could try to figure out why they bought, what was the reason behind it. I started reading some books on the stock market, but it was just pure garbage, didn't work on Forex. Because until I was working for a hedge fund, I didn't know that even level 2 existed in Forex. Everybody talks about, Forex is decentralized, there is no central exchange, blah, 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 but it's bullshit. People with uh, deep pockets, they have a chance to the information that me and you cannot get, right? So that's why they're making money and we're losing. They become your liquidity provider at the end of the day. Why? Because they know 97% of people that comes into retail, they lose their money within the first 2 years, right? That's a pretty high statistic. Knowing that you're going to lose your money within the first 2 years, right? They give you bonuses, they give you, like, I don't know, 0.1 spread, thinking, making you think that this is the ultimate answer to your question. So now you think that, oh, just because the spread was high back then, I couldn't make enough money. Now with the 0.1 spread, right? All I need to do is just make 1 pip at a time, and I'm up 0.9, right? Stuff like this. I'll talk about brokerage firms after this. Guys, give me 2 minutes. I'll be right back. Just drink a glass of water. So I forgot to record some part of this class anyways. So I don't think it was that important to record what I just said. So I record from now again. I think we missed the past 10-15 minutes. So again, guys, as I said, trend is not your friend, right? So try to think outside the box for once, and do what you do. I don't say just listen to me from now on, right? Do what you're doing, but if you're trading, either a demo account or a small live account, put it on the side. Try to think the way I tell you, right? And see which one performs better. First of all, as I said, all these financial institutions, banks and stuff, they know your psychology better than anybody else, better than you even know yourself. So they know collectively how people are thinking. Trust me, they have an access to those type of information that I told you. Plus, you don't have a deep pocket as banks and hedge funds do, right? So you have to be careful until you can grow your account. So let's talk about MT4 a little bit, and why I say MT4, it's a pretty bad platform for traders. MT4 is more broker friendly than trader friendly, right? So MT4 is more broker friendly than trader friendly. There's so much things that broker can do on the back end, right? and the only thing that you can do is just trade. See some charts, fancy stuff. They try to make you believe that it's possible to turn your idea into an EA and let it trade for you. But, as I said, show me one system making money for 5 years, right? The other downside to MT4 is it's been about, I think since 2013, they made an announcement that anybody who taps into their server and tries to trade directly through the server, they're going to get sued, right? So you are only left with building your strategy through a robot and trade with a robot. That causes latency, right? MT4 by itself is a very old piece of technology, right? That they tried to put a band-aid on it, right? They didn't redo the whole thing, but they kept coming up with new versions after one another. Like, usually you see once a month or once every 2 months they come up with a new version on MT4. You don't see it because automatically updates cloud-based, I guess, these days. So you don't see it. They don't send you something to install a new update. It's done automatically. So the back end, there is so much things that broker can do, right, in the back end. So let me have a demo account up and running so I can show you what's going on. Let me not using this demo because maybe that person is in the room. Just give me a second. Let me download a new demo. So other things you need to know about MT4 is, as I said, it's pretty slow. If you noticed, I'm going to show you what I mean by being slow, MT4 being slow, is you guys complain about the slippage, right? How many of you guys have complained about the slippage? Okay. So I'm going to show you this. See right now, MT4 just updated automatically as soon as I opened it, right? So it says it's already updated. So this is the MT4. As you all know, when I say it's slow, is when you click on an account. I just downloaded this and I haven't made any accounts yet, right? Click on the scan. Once you click on the scan, you're going to receive a ping from the broker. So one of the FXDD Malta MT4 demo server ping is 37 millisecond, which is not bad. It's actually alright on for MT4. The other one, Live 3, is 38 millisecond. I'll do one more. I'm starting to get bad pings. Anything above 30 is not that great, right? So again, 41 millisecond, 34, 37. So, but don't get me wrong. Maybe, like, let's say you live in Europe, right? And FXDD, the server, is running in the US. Yeah, you're gonna have a, high ping, right? You may get 60 milliseconds or 80 milliseconds, something like that. But this shows roughly how long it takes as soon as you click, how long it takes for your order gets to the server, and that's it, right? And now how long it takes FXDD to send the order to a liquidity provider to fill it, right? So let's just open up a demo. And let's see what's going on. So we opened up
incoming mail.
We opened up the demo. Let's see what we get in the details on the demo ping for the 1 millisecond. Okay, 39 milliseconds, something like that, not bad. I'm not sure if you place a trade, it will tell you how many milliseconds it took for your order to get filled. But I have something on my software for the ARB, for the arbitrage. These are the list of arbitrage we've done today, right? Just very small lot sizes, making 11 pips, 6 pips, 2 pips on brokers. We made some money on some, lost on some. I think in total, we made 46 pips on total. So, wow, those pings are way too high. You should definitely get, who posted those? Luxin? Those pings should be, you may get, I don't know, slippage for sure on some of them. Unless, so let me just go through this. So when I go to the log, right? Buy order execution time 3 millisecond. You can't find this anywhere, right? Unless you tap in directly to the server. So I should have not said that. So let's just skip this part because I'm making a video. I will remove that from the video later on. Then next time that I'm not recording, I tell you why. So, like, one broker 95 milliseconds, right? And see, it removed the inactive broker on this one. Some brokers zero milliseconds, right? The order got executed. 0 milliseconds, do you know how you can get 0 milliseconds? Because right now we're talking about nanoseconds, right? Not milliseconds. VPS is pretty fast. Yeah, but the problem is not ping to your VPS is, yeah, of course, 1 millisecond, right? Because VPS is very fast. But it's still the ping to the server of that broker that makes a difference, right? So see this one. It got executed in 218 milliseconds. So we had a slippage of almost 1 pip, I guess, on that one. Or we may have took a loss on that trade. These are the tests we're doing, trying to figure out who's good, who's bad, try to kick them out. So once you see anything over 150 milliseconds, right, I'm going to tell you that if something is over 150 milliseconds, it's most likely you're getting B-booked. You're getting B-booked. Why you're getting B-booked? Because of a couple of things. First, since MT4, it's a broker-friendly software, right? On the back end, they have so many things they can access. They have a risk management software that, it can tell what's the total clients, going long, who's going short, what's the exposure, and other things. Also, the broker has the ability to think, like, you should get executed within, like, let's say first 100 milliseconds with MT4. If you're trading with fix, less than 1 millisecond. Right? Less than 1 millisecond. And so these are the stuff that you need to test. I'm not going to talk about too much. So basically I'm going to run through it pretty fast. MT4, more broker friendly than trader friendly because of so many things they can do. Like on the B-book that I was telling you, the software on the back end that they have, once you place the trade, they can quickly go through your account, pass 5-6 trades to see if you made a profit or a loss. Now they make a decision based on the algo that broker has to either pass your trade to an STP or take the risk themselves. And there is no way you can figure it out, right? Unless, let's put it this way. STP means straight through processing, right? So I'm not going to take the risk. I'll send you to a liquidity provider. In that case, the Prime account that we're going to work with, it's backed by Macquarie Bank. And, we have the ability for every single trade that we place through an STP. If someone asks, I can tell you which bank picked up your trade, right? Like I can tell you which bank you bought or you sold from, or you sold it to, or, they sold it to you, or they bought it from you. In any of these situations, you'll know who bought or sold to you or from you. But for example, ask FXDD, right? At the end of the month, just ask them, can you send me a report? I just want to know, who filled my order, what was the average execution time and stuff like this. If you have, like, let's say 200, not 200, if you have anything over $20,000, they're going to let you know, right? But 99% of the time, they're not going to tell you because they're taking the other side of your trade. And by the way, guys, be aware of FXDD. They're not in a good shape. So that's one thing, right? That you're not going to find out if you're getting B-booked or ebook. Like, see, MT4, the demo server, right? It's one server, but it has 8 different groups in that one server. So, for example, I can give Michael 0.2 spread, like make it up myself, right? Because in reality, anything less than 0.4, 0.3, and 4, it's man-made. Like the broker actually puts 0.1 to 0.3, so you always see 0.1 to 0.3, right, on your chart. Or you're going to see 0.1 all the time. Like a company like FX Grow, they have 0.1 most of the time, like 80% of the time. This is something that is made up. Trust me, I know this. This is something that is made up. But on the other hand, they charge you a commission, right? So let's see what FXDD is doing. We'll place one trade to figure it out. So not charging commission, and it's almost 1.9 pips, right? They have different services. They have, like, then you pay a commission, you get a lower spread, but still their spread is like almost 1.1 pip plus a commission. And that's about MT4, right? There's so many other things that I can tell you about MT4 that it's not, I don't have that much time. I just looked at the time. It's almost 12:30 and I got to run. So I have to do the private webinar either when I come back or another time, guys. I'm sorry. But let me finish up with this. For guys that they're new, the way we trade is based on order flow. And as I said, with the access that I have, once a day, I look at the order execution, like let's say time and sells on stocks, right? I let you know the significant levels that trades were executed, right? I look at the highest volumes on specific levels. And I tell you what I'm seeing, bids and offers. Offers means they're looking to sell. Bids mean they're looking to buy. And what you see on this screen, I'll make it a little bit bigger, is you see offers on this side and bids on that side. So what you need to do is you have to think like a liquidity provider, right? So for example, you're buying at the offer, selling at the bid, right? What you're exactly doing, they're buying at the bid and you're selling it to them. They're buying it from you. So you're buying at the offer or at the ask, right? And they're selling it to you at this price. 97.7, they're selling it to you and you just bought it, right? They're offering to sell, offering to buy. So what you see down here, these are limit orders, guys, by the way. This is not a full level 2, and I don't recommend to base all your decisions based on what you just see here. It can help you a lot, but not rely on this 100% because you don't see the bigger picture. Once I can transfer the feed to my software, then I can give you access to it so you can see it, see what I see. But until then, this is just a small picture for you to be able to get used to it and try to analyze the market from the market maker point of view, right? Let's just, if anybody knows anything about COT, which I'm gonna teach guys in the private group, but COT, think about this, that you have COT but it's live instead of updates once a week, right? It updates every minute. Like even on COT, you don't get the whole picture because there's dark pool, there orders not being reported, and a whole bunch of other scenarios. So what you see on here is you take a look at the quantity of the totals, right? And you have to look for an imbalance. The imbalance is, I usually look for anything which is 2-to-1 ratio, right? So if the quantity of the bids are twice the offers, right, I'm thinking to buy. If the quantity of offers are twice the bids, I'm thinking to sell. So I'm going with the liquidity providers, right? Not with what you guys are doing. So what it really means is once you see bids, right, are twice the offers, that means they're getting a rush of buying order, right? And now they have to provide liquidity on the other side. So once they provide liquidity on the other side, what will happen is, since there are liquidity providers, some other banks or hedge funds may see this and pick it up and follow them. So like last thing you know, everybody's trying to follow the other person, and they help each other to what? Push the market. There many different methodologies. Everybody makes their own methodology or type of way to trade this order flow. Some people like to make it complex. They put it on charts, try to make footprints, and I don't know, just I laugh at people that they're trying to make something easy complex, right? Come on, you only either buy or sell. Why do you use like 10 different indicators on your chart? Adding Fibonacci on top of it, plus 5 moving averages, 2 MACDs, 1 RSI, CSI. How can you analyze all these information? Very simple. You should be able to make money. But not as simple as I said, because of your psychology. So that's one thing that you look for, bids and offers, right? Then the levels I'll give you, like for example, we didn't have any bids and offers today, but for example, during the day I say these are offers. So what you do is you draw it on your chart, right? And I give you some bids, like let's say these were the bids, right? So down here are the bids, up there are the offers. So what happens is you can expect when price hits these levels, right? Price will react to it, either 5 to 10 pips up or down, right? Because if bids are taken out, the price jumps 5 pips or 10 pips. Easy, right? Like they're gonna go through them like a train. Or if it gets stopped or stalled at these levels, it will drop 5-10 pips easy, right? So don't take them by itself blindly. Like I always recommend, if you have a strategy and you're at like let's say 1200 and we had bids at 1200, right? Offers at 1200, then I would say you can go short because your strategy said so, right? And you're sitting at strong offer levels. These are not like pivot points or Fibonacci numbers. These are the major market players, right? That they're buying and selling on a specific level. So we can have, sometimes on occasions you guys see, I'll make this red. You're going to see that we have bids at 1220, right? And you're going to say to yourself, how can we have bids at 1220? Well, we can, because there are limits. Someone put a limit order to buy at 1220. When price gets to 1220, it gets executed at market. So that's how it works. So usually when I call or call a trade, I tell you what I'm looking at. We have two type of trades. I either tell you that I'm buying or selling, right? Which is very simple. Or I tell you that we have a time trade. On a time trade is something I made, a methodology I made myself based on order flow. So what happens is we're going to see I'll see on my back end, I'll see two levels, like let's say between 1220 and 1230. There are a whole bunch of bids and offers, right? Whole bunch of bids and offers trying to beat each other, right? Like, on a candlestick pattern that you see, like it opened right here. If I make it bigger, price opened up here, they pushed it down, and then price went back up. There were buyers, lots of buyers, so even all the way back up, a little bit of sellers, and price closed here, right? So I'll see this in action, and what will happen is, I can tell which side is heavier than the other side, right? And if I see fake orders or orders that looks fake but they're legit, so I see these type of things, then I'll make a decision, right? So the decision could be two things. I will say, if within the next X minutes, right, we stay within this range, I'll go short at market or I go long at market, whichever the scenario is, right? Sometimes I say if we stay within this range. Most times I say we cannot break 1230, right? So you have to make sure, if by the time I'm telling you, if we broke 1230, that means trade is killed. Why? Because, already took off sooner than I thought it's going to take off, right? Because, like, let's say couple of $1 million playing here, right? Couple of hundreds of millions of dollars are being played at this level within this range, like the same thing as being played here, right? Within these two ranges. So I say, if by, it's usually 15 minutes or 10 minutes intervals, right, that I call. So I say, if by 1230 we stay within this range and we do not break 1200 before 1230, I will go long at market. Whatever the price is within this range, you just click to buy or sell as soon as we hit 1230. So I created an order type for myself that it will buy specifically at that specific second, like it will get executed right in the milliseconds of 1230. Right? And I built something in it that if the price hits before the time, it will kill the trade. So it will remove the limit order. Because all limit orders becomes market. That's why I'm saying, buy at market. So any questions so far, guys? Alright guys, I'm gonna leave it as is for today, right? And I have to run do something, and hopefully I'll be done within about an hour or 2 hours max. And if people on the private room are still here, we're gonna go over the strategies that I taught you, and also I'm gonna teach you something new about COT. Alright guys, take care and I'll speak to you guys shortly.